everybody. Thank you for having us. My name is Danielle Torres, and I'm part of McCoy Federal Credit Union. My specialization is business development as part of our marketing team. We're here today to talk about how we can help you achieve personal financial wellness. One of the benefits of being a member of McCoy is having access to GreenPath Financial Wellness. Our partnership provides our members with GreenPath services free of charge and includes personal budgeting tools, online financial education, credit counseling, debt management, housing services, student loan assistance, all kinds of things to help. And we have a video provided by GreenPath on how you can automate your finances. This can bring a more secure peace of mind for not only monthly expenses and bills, but also for your savings goals and paying down debts owed. And without further ado, here is GreenPath.
Hi everyone, and thank you for joining us today for How to Automate Your Finances. My name is Matthew Gage, and joining me today is Dusty Young.
Good afternoon. I hope everybody is doing fantastic. We're excited to talk with you guys today about how to automate your finances.
Yeah, and Dusty and I are both with GreenPath, of course, and we're on the partner relations team, and we're happy today, like I said, to be talking about how to automate your finances. It's a topic we really believe in, and we're really happy to share with you today.
And I think what's unique is we're not just going to talk about how to automate your finances. It's not a set it and forget it. We're really going to talk about how to automate the right things to set yourself up for success.
So, and this is the thing that we really want to point out today. There's a lot of times people are very stressed about their finances, and it's something that they're thinking about all the time. And really, I want you to consider a few different things here today and how making some simple changes to your finances could really change your life. I mean, how would your life change if your money was automatically going to where it's supposed to? What could that do for your credit each month? Your bills being paid on time. I mean, that's the big part. 35% of your credit score is your timely payment history, right? So how could that help you there? And as far as savings too, I mean, generating a habit, starting a habit.
It's interesting, isn't it? Because when we think about why we don't handle our money the way that we want to, a lot of it comes down to time. I'm too busy or life got in the way. We all have so many things going on that it can be hard to make time or to find time in order to automate our finances or to make sure that we're taking a look at our spending. So as we're going through this process, I want you guys to identify those barriers. So just take a second, pull out a sheet of paper and jot down what are the things that could get in your way. What are the reasons that you currently don't feel like your financial situation is the way that you want it to be? Is it time? Is it, oh, my spouse and I just can't get on the same page? What are those barriers? Because if you know what they are ahead of time, it's going to be a heck of a lot easier to tackle them.
Right. And I think the thing, too, especially when it comes to the barriers, for a lot of us it's time. For a lot of us it's this kind of mental game that we play with ourselves. Maybe it's too overwhelming. There's a lot of things going on in the finances. There's a lot of due dates. There's a lot of just chaos in general. So what can we do to maybe simplify things? And I think that's a good place to start is really, review your expenses. Maybe go back for the previous month and just it doesn't have to be an enormous amount of time, 10, 15 minutes, and just kind of run through, where were these expenses kind of coming from? Where are they going? Maybe where are my problem areas? What are my due dates? Because for a lot of people, that could be another thing as well. So it's a good place to start to just kind of go back and review your finances in general.
Yeah, when you're automating, you really need to have a list of everything that you're spending. So knowing what those monthly expenses are and what those due dates are is important. GreenPath is here to help you with that process. So if you've never reviewed your finances or you just want someone to take a second chance, you can give us a call. We'd be happy to go through that with you. Also, if you've ever been to GreenPath, we do a lot with sticky notes. So we do recommend, if you have a pad of sticky notes sitting nearby, just one expense per sticky note. Write out everything that you're spending money on every month, especially those fixed expenses, because that makes the automation part a lot easier.
Right, exactly. And that's the thing, too. And we're not talking about necessarily every single expense that you go through as far as automating, but if you can automate those fixed expenses and, those things that are due each month that are always the same payment, it can help you in a lot of different areas. And the first step when we talk about the automating of finances is really making sure that you have the right accounts open, right? And there's three big areas that we're looking at. It's savings and making sure that you have that savings account. Payments and bills, like is it possible to set up an account that's exclusively for things that are due? And that really helps with the automated process because it can kind of separate these things.
Yeah, so Matt, let's pause there for a second. Why do you like that idea so much of setting up a separate account just for your bills?
For me, and what I've noticed is that when you have one account that you're doing both your spending and your bill paying out of, it can create some chaos there, right? It can create, and I use that word a lot because I just feel like people feel jumbled with their finances. But, I have the rent due, I have my car payment due, but I also need to go buy some things, right? How much do I have available to spend on maybe it's clothes or maybe it's, maintenance for my vehicle? And if I don't have that separation there, I might not know how much to spend. I might overspend in some areas, which could cause me to be late on a bill payment.
Yeah, so if I'm hearing you right, it keeps things simple.
Right.
So in order to simplify your finances, having 3 different accounts, one that's just automatically, this is my savings, I'm not going to touch it. The next one is, this is everything that I need to pay all those fixed expenses that we just wrote down. And then the third one is, this is the money, this is our slush fund, right? This is the money that we have to spend. I'm not married, but I'm guessing that would probably be a lot easier if you're having conversations with your spouse too, right?
Yeah. So, and then this works really well if you have dual income. So if you're, what if you're paid on alternative weeks, or what if one person is biweekly and one is semi-monthly? Will one person's paycheck cover the bulk of the bills or a good portion of them? However you want to, because when you separate the accounts and you have that bill paying account, if I add up all my bills that are due this month, this is how much we need set aside. And if I have enough income from one source to cover that, that will allow you to separate the other two. This is what we have for spending, this is what we have for savings.
And I love what Matt just said here. I want to make sure that everybody hears that. If you set aside enough money out of each check in order to cover your fixed expenses, then it doesn't feel so stressful. It doesn't feel like, oh, I just got paid and my whole check went to my mortgage and now I don't have anything to live on.
Right.
So that can also help curb credit card debt. That can help curb additional spending. So what a fantastic idea to set up 3 accounts of step 1. There's a ton of different accounts. So when I walk into my credit union, I see that I can have 3 different checking accounts. Do you see that too, Matt?
Yep. And you could have sub accounts within your main account, which is another thing. And I used to work for a credit union years ago, and I would oftentimes set up sub savings accounts labeled rent or something of that nature, just so people could separate. If you're having trouble keeping up with your rent, if you did a biweekly auto deposit into that sub account, that pulls that money out of that main account, and that's a way that you can kind of separate the funds needed.
Yeah, that's fantastic. So check with your financial institution. Make sure that you're using the best account for you. So if they have several different checking account offers, make sure that you're using the checking account that's going to earn you the most rewards. And then, like Matt said, take advantage of some of these sub-accounts. I think a lot of them, too, even allow you to put a picture towards your goal or put a label towards what you're working on.
Interesting, yeah. For sure.
So, do those things. When you see it on paper, a lot of times it incentivizes you to really work towards that goal.
Agreed. And the big part of this, too, has to be, we talked about bill paying and spending, but savings is really the big, especially when it comes to automation. When you have that kind of set it and forget it mentality, if you have your other 2 areas covered with the bill pay and the spending, that's going to allow you the chance to start saving and saving more. Savings works, having that automatic savings set up helps you in a couple different areas too, and it can actually be an excellent budgeting tool. And I tell people this when I talk about budgeting. If you find yourself pulling from your savings account regularly, maybe monthly, weekly, whatever, that's a sign that you are spending too much. That's an overspending sign. I kind of call it a financial tripwire, right? So having that automated savings can definitely help you in a couple different areas. You're building that savings account up, but you also might be seeing red flags and indicators in other areas of your finances. It can use both. The other great thing is you're never going to hurt yourself by saving money or setting aside, so depending on where you're at and how much you can commit, maybe find a number that you think you can commit to and start there. But the thing is, you can always adjust. You always have that ability to adjust as you go forward. It's never going to hurt you.
And start small. Maybe you automate 1%. 1% of your check, you're not really going to feel the difference. And studies have shown if you automate your savings, it doesn't really change how much you're spending. So it just helps you make different spending decisions. Start with 1%, and then guess what? If you're going to get a raise, commit to putting part of that raise into your account. So, gosh, I'm getting a 3% raise. Maybe I take 1% of that and I put it into my account. Or maybe every 3 months I'm increasing that 1% by another 1% to just make it more and more of a habit. You can do this with payments too. So if you pay off your car loan, instead of getting a new car right away, maybe you just start putting that money automatically into your savings.
Yep, that's something I always, when I was a loan officer, I'd recommend all the time. Like, once you have this paid off, or the vehicle paid off, just continue to make that car payment into a savings account. You're used to paying it already. That money goes into a savings account. You're saving up for your next down payment, or you're building up that emergency fund. I mean, realistically, you need to have a baseline emergency savings account. Typically $1,000 is what they say, but really what you want to build is 3 to 6 months of expenses, just in case, something happens, you have that back up there to take care of you there. So.
And it can be really fun once you start to save, because then you start setting different goals.
Right.
Maybe you want to go to Disney. Maybe you want to travel to Italy. Maybe you want to buy a dog and you get everybody on board. There's some fun apps that do that too, like Goal Setter, where kids can learn that opportunity. They can learn how to save, which is really cool.
Yeah. And if it's not something you've done already, setting a short-term goal is a really good way to start. Maybe something in the next few months that you want to either purchase or something of that nature. It's a really good feeling to pay for that in cash or take care. Save up for, like myself, I need to get a grill this summer, right? So maybe I save up for that or something and then pay cash. So something like that can really be a great motivator and keep you going. Another thing that we want to look into and dive in, as well is just your bills and expenses. So kind of covering that area. Online bill pay is a great way. Research your financial institution and what they offer, but the online bill pay is a really good way to kind of start that process of automation if you haven't done so already.
And Matt, one of the things that you mentioned earlier was keeping things simple. So it sounds like if I already have my checking account set up and I know that I'm automatically putting enough money to cover my expenses, I could just link it to this bill pay, and then if I'm running late or if I'm in a hurry or my kid has a game, I don't have to worry about rushing home to log in to make a payment or remembering when it's due. I can just set it and check it once a month.
Don't forget it. I use that too much. But yeah, you want to review, but yeah, certainly, absolutely.
Yeah. The other cool thing that I love about bill pay is for a while I was trying to do automatic payments and I had to log into 12 different places to make sure that my payment posted. With bill pay, I can log into one and make sure that everything went out, right? My car insurance is paid, my electric is paid, my heat is paid, my water. Everything goes out automatically, and I check one place. I have one username and password. I don't have to remember everything. And my financial institution allows me to actually get some of these bills pulled in right to my bill pay. So my electric company, they just send it right to my bill pay. I don't even have to think about it. Consumers, which is our energy company in Michigan, same thing. It just comes right into my bill pay. I don't have to think about it. So this way you can log into one place, you don't have to log into 10, and to Matt's point earlier, it's all about keeping it simple.
Yes. It's too easy to miss a due date in some way if you're trying to remember all of these different things and all these different logins. And, myself, I've caught myself and like, wait, I didn't pay the gas bill.
Yes, and if you're going to use that brain energy, you might as well use it to remember something like your anniversary or someone's birthday, because that will get you in a lot less trouble.
Exactly. Now, the other thing too, and this is something that we see a lot of times with budgets. I mean, if you take somebody's income and you subtract their expenses, and they have a surplus, and you think, oh, wow, they're doing great, everything's fine. But that's not always the case. Sometimes people have a lot of due dates right at the beginning of the month, maybe towards the end of the previous month at the beginning, so that's a lot of money that's going out at that period. And sometimes what happens is they're running a deficit for that first couple of weeks, and then they have to go ahead and use a credit card to kind of keep having something available until that next paycheck. So in reality, you're almost running a deficit because you have to recover in the middle of the month. So
this is one of those barriers that we talked about. Like, this is absolutely one of those things where you list out all your expenses, list out all your due dates, and then you say, oh, Matt and Dusty, I can't do this because it doesn't line up right.
Right. Yeah. And that's so. Check your due dates. When are your due dates? Is it possible to move a due date in some capacity? Is there anything you can do? And if you can't move the due date, another option could be to look at a biweekly pay schedule. Because what that's going to do is that's going to allow you to kind of spread that cash out over the month. So I know a lot of financial institutions will do this with like car loans, but if you have like a personal loan, and maybe even a credit card or something that you're trying to pay off, is there a way that you can automate that, spread those payments out through the month?
And if neither of those things work, look at setting money aside every 2 weeks and see if you can continue to walk your payments forward.
Mm-hmm.
Because if you're paid biweekly, the 2 times a year that you get extra money,
Yep.
you could start paying things a little bit sooner. And with your mortgage, you have that grace period.
Yep, exactly.
So maybe I wait a little bit longer to pay that, and then I just keep paying it sooner and sooner.
Yep, exactly. And, and this is a great opportunity, too, if you're looking at doing that biweekly. That's going to help you pay that debt down a lot faster. If you have a credit card that you're trying to pay off and you stop using the card, that's a big important part first time you're trying to pay down credit card debt. But, through this automation, you might be able to find some extra money to put towards it. If you added just $50 to a minimum payment, it can cut the time to pay that down by years. It's
Absolutely. If you check out our website, we have some really great calculators where you can see how you could pay things off a little bit sooner. But what I love about automation is if I set up a payment of $50, I know it's more than the minimum payment, and I'm not changing it. Where if I just rely on my statement, every month that payment gets a little bit less, and I might only pay the minimum payment instead of paying the extra.
Right.
So, like Matt said, put that extra $50, set it, check it once a month, and then don't worry about it. Let it go ahead and pay itself off.
Yeah. If you have and this is my own personal thing, right? I have a card that I'm paying off. It's a 0%, but it's only 0% for a certain amount of time. So what I did was I automated it through my bill pay. At this particular amount, it will pay it off before the end of this promotion. That's a great way to do it as well, because I'm paying more than the minimum. I know it's going to be paid off by this date, and I'm not playing that game with the statements like maybe I'll send 25 this month instead of the extra, because
it can be so tempting, especially if you have a month that's really busy or you have a month where there's extra stuff going on. March is a really big birthday month for me, so I feel like I spend a lot more in March and early April because there's a ton of birthdays. That's when I might be tempted to spend less on my credit card than, hey, I want to make more than the minimum payment.
Yep, exactly. And then looking at the investment side too, this is something that, through your employer, you're probably, a lot of you are probably already automating your investment contributions.
And I know there's so much research that shows the earlier you start to contribute to your retirement, the better. And the longer that you let it sit, the better that you're going to do. If you automate that, a lot of times you don't even see a big reduction in your paycheck because those are pre-tax dollars. So, again, start with 1%. Matt mentioned if your employer is contributing, do anything that they are contributing, because if they have a match, that's free money. So if you get 3% by giving 3%, do whatever you need to do in order to find that so that you can take advantage of the free money. And the sooner you do it, the better.
Yeah. And the other thing, too, on this, it's always good to get advice as well. And I've noticed a lot of retirement specialists these days are kind of taking a holistic approach to how, where to spend, on the investment side of things. So I always advise you to, the personal budget is going to be a really key factor in terms of what you're able to do on the retirement side, because what I do see a lot of people, they put as much money away as they can because they want to plan for retirement, but they're using a ton of credit cards and they're paying a ton of interest on those credit cards. So it can kind of work backwards in some ways. So you want to make sure that you talk to somebody who knows what they're doing with this area for sure.
And I think it provides some reassurance too, right, Matt? Like if I want to work until I'm 65, I want to know that I have a plan to get there.
Yes.
Because you don't want to be 65 and realize, oh my gosh, I can't retire because, I have a ton of debt and I haven't been setting any money aside. Where if you talk to somebody and they can give you a game plan, then it puts it in your reach. It allows you to have control over that versus just hoping. Hope isn't really a very good strategy.
Right, exactly. So finally, and this goes to what we just talked about here, but, as you go forward with this, it's always important to kind of evaluate where you're at and then adjust as needed. So whether it's a raise that's coming, whether it's a big purchase that's coming up, you always have to be flexible with your finances to make sure that you're getting the most out of them.
Yeah, I love this point. Life isn't fixed. There's different things that happen all the time, and how many memes do we see after Christmas where people are shocked because Christmas came? It's December 25th every year. Right. And yet we're not evaluating. We're not adjusting as we need to. So it's Really important to think about the month ahead or a couple months ahead. Just jot down, what are the things that are coming? What are you expecting? Because then you're going to feel good about your finances as you go into those things. And that's what this is about, right? It's about feeling good about where you're at financially so that you can make great decisions.
Mm-hmm. Yeah, and the thing is too, especially when it comes to managing your finances, the more complicated you make it, the less likely you are to continue. And this is where people see, this is a barrier for a lot of folks. It's just too complicated. It's just too much. I'm using those spreadsheets, and I hate opening that file, and I don't like, if it takes too much time and it's too complicated, people are less likely to engage on it. So, keeping it simple, doing it in kind of with your lifestyle and when you can evaluate, but, again, keep it simple. And I think that's going to help you going forward.
Yeah. So I hope you guys really heard our theme loud and clear. Yeah. Really automating your finances is all about keeping it simple.
Yep.
So it's just one of the steps that you can take in order to keep it simple, which is going to be the path to success.
Yep, absolutely. And like I said, and like Dusty mentioned at the beginning, we're here to help with this stuff. We're talking about people's finances every day, so always feel free to talk to us. It doesn't cost anything to talk to one of our financial wellness experts. They'll help put together a plan and really kind of get down and talk about your goals, because that's going to be a really big part of this. You want your finances and what you're doing there to match your goals, so we're more than happy to help there.
Yeah, we all need a coach to optimize.
Yes.
So feel free to give us a call, and thank you guys so much for joining us.
Everybody.
Thank you again, everyone, for having us. We hope this information has been helpful to you and has empowered you to step towards your financial wellness. If you have any questions or would like to discuss this topic further, we're happy to speak with you. Our contact information is below, as well as our website, where you can view more benefits of being a member of McCoy, our account, products and services, and how McCoy cares about our community. Thank you so much, and see you next time. Bye.